Assalamualaikum and good day everyone. My name is Siti KHADIJAH Binti and I will be presenting part of financial analysis for KPJ Healthcare BERHAD and IHH Healthcare Malaysia. In this part, I will explain for the background for KPJ and IHH, also the trend of analysis for liquidity ratio of KPJ for 2020 until 2024. So now, let us start with the background of both companies. Firstly, KPJ Healthcare BERHAD was established in 1981 and it is known as First Malaysia's private specialist hospital. Since then, KPJ has grown into one of the largest private healthcare providers in Malaysia. Currently, KPJ operates more than 20 specialist hospitals all over the country. KPJ provides many medical services such as specialist treatment, surgery, and emergency services. Besides hospital services, KPJ is also involved in healthcare education, senior living care, and health tourism. In simple words, KPJ is not just a hospital, but a complete healthcare group that provides many types of healthcare services. Next, I will explain for the background of IHH Healthcare Malaysia. IHH has been operating since 1970 and is part of the global IHH Healthcare Group. In Malaysia, IHH owns well-known hospitals such as Eagles, Pantai, Prince Court, Island Hospital, and Timberland. IHH is strong in terms of medical technology and international expertise. They use advanced equipment such as robotic surgery and specialist cancer treatment machines. Now, I will explain the liquidity trend analysis for KPJ Healthcare BERHAD for 2020 until 2024. Liquidity ratio shows the ability for the company for the short-term liabilities. The two ratios this year are current ratio and quick ratio. The formula for current ratio is current assets divided by current liabilities. And the formula for quick ratio is current assets minus inventories divided by current liabilities. For the year 2020, KPJ's current ratio is 0.83. This means for every 1 ringgit current liabilities, KPJ had only 83 cents for current assets. The quick ratio in 2020 was 0.58. This means after removing inventory, KPJ had only 58 cents to pay 1 ringgit ratio for short-term debts. This shows that KPJ had weak liquidity position in the year of 2020. The main reason is because 2020 was the COVID-19 year. Patient numbers dropped, revenue decreased, but KPJ still need to pay for the salary, medical costs, and utilities. So, cash went out faster than cash came in. In 2021, KPJ's current ratio slightly increased to 0.87 and quick ratio increased to 0.61. This shows a small improvement in liquidity compared to 2020. This improvement happened because KPJ started to adapt to the pandemic. In 2022, KPJ's current ratio slightly decreased to 0.84 and quick ratio slightly increased to 0.88. This means KPJ had more liquidity on current assets such as cash and receivables, but inventory levels might have increased. This is because in 2022, more patients returned for treatment after lockdown ended. In 2023, KPJ's current ratio increased strongly to 1.18 and quick ratio increased to 1.24. This means KPJ now had more than 1 ringgit of current asset to cover 1 ringgit of current liabilities. This shows strong recovery after COVID-19. Because of this, KPJ liquidity position become healthier in 2023. In 2024, KPJ's current ratio remained at 1.18 and quick ratio remained at 1.24. This means KPJ has stable cash flow, good revenue, and good financial control.
Okay, so next I will presenting to you about activity ratio. What is the activity ratio? Activity ratio is a financial metrics that are used to measure how effectively companies utilize their assets into revenue or cash. So technically there's a 5 ratio that you need to know under activity ratio. The first one is going to be receivable turnover, average collection period, fixed asset turnover, total asset turnover, and the last one is going to be inventory turnover. So let's go through each one of them one by one, okay? Okay, for the first one is receivable turnover. As you guys can see the graph next to me, it shows that from 2020 to 2021, KPJ's receivable turnover shows increase. It means it shows efficiency. However, for 2022, it shows decrease. Why is that so? It happened because a late payment from the third parties. The next one, we will talk about a fixed asset turnover. Okay, the graph shows that a fixed asset turnover increased steadily from 2020 to 2023. It means that companies show a better use of their fixed asset. However, the graph also shows that fixed asset turnover for 2024 is decreased. Next, I will talk about total asset turnover. The graph shows that total asset turnover increased from 2020 to 2021 and declined in 2022 before improve again from 2023 to 2024. This shows KPJs become more efficient in using total assets to generate revenue in recent years. The last one for activity ratio is inventory turnover. Inventory turnover declined from 2020 to 2023, suggesting slower inventory movement. However, the increase in 2024 indicates improved inventory management and sales efficiency.
Next, I will explain about profitability ratio. Profitability ratio measures how well the company generates profit from its operation. To get profit margin, net income must divided to sale and times with 100%. The answer will get in percentage. So profit margin for 2020 is 4.60 and for 2021 profit margin is 2.05. For 2022 profit margin are 6.30. For 2023, the profit margin is 7.91, and lastly, the profit margin for 2024 is 10.38%. For return on asset, net income must divided to total asset and times with 100%. The answer also will get in percentage. For 2020, return on asset is 1.80%. For 2021 is 1.11%. For 2022 is 2.60%, and for 2023 is 3.70%, and lastly for 2024 return on asset is 5.50%. Now I will explain about return on equity. To get return on equity, net income must divided with shareholder equity. For 2020, return on equity is 5.00%, and for 2021 is 3.06%. For 2022 is 7.80%. For 2023 is 11.30%, and for 2024 is 14.88%. Next, I will explain about the leverage ratio. Leverage ratio is to measure the prudence of the debt management policy of the firm. Now, I will explain about debt to total asset. To get debt to total asset, total debt must divided to total asset. For 2020, debt to total asset is 64.14%. For 2021 is 63.91%. For 2022 is 66.34%. For 2023 is 65.11%, and lastly for 2024 is 49.60%. Formula for time interest earned is income before interest and tax divided to interest. Time interest earned is 0.92 times. For 2021, time interest earned is 1.57 times, and for 2022 is 2.04. For 2023 is 2.79 times, and lastly for 2024 is 3.69 times. Next, I will explain about fixed charge coverage. Formula for fixed charge coverage is income before fixed charge and tax divided to fixed charge. For 2020, fixed charge coverage is 0.80 times. For 2021 is 0.97 times. For 2022 is 2.57 times. And for 2023, fixed charge coverage is 3.04 times. 2024 is 2.56 times.
For this section, we will present a comparative analysis between KPJ and IHH Healthcare, focusing on liquidity, profitability, activity, and leverage ratios to highlight differences in their financial performance. First, we have liquidity analysis, which is current ratio and quick ratio. For current ratio, based on the chart, KPJ records a current ratio of 1.24 times, which is higher than IHH 0.72 times. This shows that KPJ is in a stronger position to meet its short-term obligations compared to IHH. Next, for the quick ratio, KPJ again outperforms IHH with 1.18 times, while IHH records 0.65 times. This indicates that KPJ has better immediate liquidity than IHH.
So now I will explain to you guys about the activity ratio for the comparison between KPJ and IHH. For the receivable turnover, graph shows that IHH is more efficient in collecting cash from its credit customers throughout the year compared to KPJ. KPJ shows that 5.02 times, while IHH shows that 6.78 times. For the average collection period, IHH has a better collection management as it takes only 54 days to collect receivable, which is faster than KPJ's 73 days. It means IHH do collect their debt faster than KPJ. For the fixed asset turnover, KPJ demonstrates better efficiency and effectiveness in utilizing its fixed asset, such as medical equipment and buildings, to generate sales compared to IHH. It means KPJ provide a better service to their customer. For the total asset turnover, KPJ demonstrates better efficiency in utilizing its total assets to generate sales revenue compared to IHH. KPJ provides about 0.53 times better than IHH, which is 0.47 only. The last one for inventory turnover. KPJ is more efficient at managing and selling its medical supplies, which causes KPJ having a higher turnover frequency than IHH, which is 49.03 times, while IHH only 35.80 times.
Third, we have profitability analysis, which is profit margin, return on assets, and return on equity. For profit margin, IHH performs better with 12.97% compared to KPJ's, which is 10.38%. This shows that IHH is more effective in generating profit from its revenue. Next, looking at return on assets, IHH records a slightly higher ROA of 5.57% compared to KPJ's, which is 5.50%. Although the difference is small, IHH demonstrates marginally better asset efficiency. Next, for return on equity, KPJ significantly outperforms IHH with 14.88% compared to IHH, which is 9.33%. This indicates that KPJ generates higher returns for its shareholders.
Thank you, AINA. Now, I will continue with leverage ratio. The first ratio is debt to total asset. The result shows that IHH has a lower ratio compared to KPJ, where only about 26% of its assets are financed by debt. This indicates that IHH relies less on borrowing and therefore carries lower financial risk. The time interest earned ratio further supports this finding. IHH record a higher ratio, which means it is more capable of covering its interest expenses using operating profit. Similarly, the fixed charge coverage ratio shows that IHH has a stronger ability to meet fixed financial commitments such as interest and less payment. Overall, the leverage analysis indicates that IHH has more stable financial structure and lower long-term risk compared to KPJ Healthcare BERHAD. Based on financial ratio analysis, several recommendations can be posed to strengthen the KPJ performance. From liquidity perspective, KPJ should focus on increasing current asset and improving cash inflow. This can be achieved through better inventory management and by reducing unproductive inventory. In terms of activity ratio, improving inventory turnover through more accurate demand forecasting is essential. This will help minimize holding costs and reduce excess stock. Regarding profitability, KPJ should aim to improve its gross profit margin by controlling the cost of goods sold. This may involve negotiating better price with supplier for medical supplies and raw materials. Finally, with respect to leverage, KPJ should gradually reduce its long-term debt by utilizing excess cash flow, retaining earnings, or proceeds from non-performing assets. This recommendation will help enhance KPJ financial stability and support sustainable long-term growth. In conclusion, the analysis shows that KPJ Healthcare BERHAD faced significant financial pressure during COVID-19 periods. However, from 2022 onwards, KPJ demonstrated consistent improvement in liquidity, profitability, efficiency, and solvency. When compared with IHH Healthcare BERHAD, IHH remained financially stronger due to its large scale and lower risk profile. Nevertheless, KPJ has shown encouraging recovery and improved financial stability in recent years. Overall, KPJ Healthcare BERHAD has strong growth potential, provided it continues to manage debt prudently and improve operational efficiency. Thank you.